All right. So welcome again to the afternoon session. So this is what was formerly the FAS 101 session, and you know, that was a workshop, training that we had done for many years, which was intended to provide an overview and introduction of all things FAS. All things market development programs at any rate. Like I said, we had done that for many years. It was kind of an introductory session. I felt like in the last couple of years that thing had kind of run its course, and we wanted to try some other approaches. In the last couple of years, we focused in on some specific things. We looked at, we had the compliance session. We had some more focused sessions that seemed to be well received. And so this year we're trying this approach. So we're calling this a nuts and bolts refresher. It's really designed to be operationally focused for those people, not just new to the programs, but seasoned veterans that have been with us for years and for decades, to give everybody an opportunity to come together just for us to talk to you and for you to ask questions and come back to us with things of a real operational nuts and bolts type focus. This is a joint session between both with the Cooperative Programs Division staff, who will be on the program after I talk for a little bit, with my staff, POD. Because it's new this year, we restricted it just the two of us because we felt like we wanted to try it and see if this worked. If it feels, if this is a successful approach and it's well received and you guys like it and think it's beneficial, and we continue it in future years, maybe we might include compliance. We might bring some others in, but this year it's just within the global programs family. So I'm going to talk, then COPD is going to talk for a while. We hope to have time for questions and answers. When we get to that point, you can put questions in the chat for us. You can come off mute. I think we're going to try and manage actually having people show up on screen and ask questions, so really, give and take that way. I think Lorena put out the request this year for topics for the session. I don't know that we received any, which is fine because it was a brand new session. Probably nobody knew really what to expect, but I would like to hear what you guys think of this approach. Is this valuable? Is it a good use of your time? How can we change it? How can we improve it? And if we continue to do this in the future, I would love to get input from you guys the next time we do it and in the future time, so that we're tailoring what we're talking about to you, what you want to hear. We came up with some topics that we're gonna talk to this time, things that we have identified on the FAS side is issues that we think would be of interest to the audience and would be valuable to you. But I want to make this time, and I know everybody else that's on the program, we want to make this time work for you. And so if there's, in the future, if there's something that you want us to address, make sure that you give us feedback, what you liked, what you didn't like, so that we make sure that this time is useful for you. So here's the topics that I'm going to go through. We'll get to each of those in turn. COPD, like I said, they're going to have their time. Beth is going to be talking at the end about additional training opportunities. Just because we're abandoning FAS 101 in this environment doesn't mean that we're not willing to provide that training. So she's going to talk to you about that. And like I said, Q&A time at the end, which is your time to make it valuable for you. So diving right into the topics that I wanted to cover. The first thing is I wanted to talk about the regulations updates. We've been talking for a while about doing some technical updates to the MAP and FMD regs that we published a few years back, which is the big changes that we made a few years back. I had hoped that I would be able to tell you that these were published and that they were effective. Unfortunately, they have not yet been published, although we think it's pretty imminent. As I understand it, I know that they've cleared the internal FAS clearances. I believe they've cleared all of the department clearances I mean, there's a whole bunch of hurdles that they have to get through before they're published in the Federal Register. I think all of that is done. And we're just waiting on publication, which I understand should come any day now. So I expect before the end of this calendar year that we will have published the MAP and FMD regs, I mean, these updates to the MAP and FMD regs. If we are able to publish them before the end of the calendar year, then my intention is that we would make them effective immediately, which means, the new regs that we published a while ago, we implemented those with the 2021 program year, which obviously we're still in. And so if we can get these technical changes out, then those would apply to the 21 year as well. But nonetheless, even though they're not formally published, I'm going to give you a sneak peek at what's included in there so that you're familiar with the changes. And when the new regs, the changes to these regs are actually published, I will provide to Lorena to send out to everybody just a listing of each of the changes so that you know specifically what has changed through each of them. This whole exercise started because OMB made some changes. They changed a few of the numbering in 2 CFR 200, which is, we reference throughout both of those regs, MAP and FMD. So that required us to open those back up just to make those changes because OMB changed a paragraph by a number or two. And we took that opportunity to make a few other technical changes, which I'm going to walk through right now. So these changes here that I'm showing you apply to both MAP and FMD because the language is identical in both of the programs, in both of the regulations. The biggest change, this was one that we really wanted to do. We have eliminated the annual evaluation requirement. The current regs say every year or when required by CCC, you have to do an evaluation. We've taken that out, and it's simply the new regs will simply say when required by CCC, a MAP participant or FMD cooperator shall complete a program evaluation. So the mandatory annual requirement is gone. And you're going to be working with COPD, with your marketing specialist on an evaluation plan that you can both agree to. And COPD is going to talk in their time a little bit later on the program about how they envision that process working. We have also changed the language in the US Pavilion requirements for the trade shows to add a little bit more flexibility. Right now it says you have to be in the US Pavilion unless your distributor is outside, and then there's a second reason that you can get out, which escapes me right now. But we've added a third, which is or when a company can demonstrate that there's a benefit to being located outside the US Pavilion. So it just gives us a little bit more flexibility to work with participants that want to be at these shows but don't necessarily want to be inside the US Pavilion. The third change that we made, right now the regs say the cost to ship samples from the US to a foreign market is an eligible expense. We've eliminated that from the US language. And so now it just says the cost to ship samples is an eligible expense, which means if you have product samples that currently are stationed in Africa and you want to ship those to an event in Europe, that would be an eligible expense. Doesn't have to originate from the US. And then a few additional changes that we made just to the MAP regs only. MAP regs in the contracting procedures talk about in-country representation. Doesn't have to be, rebid every 3 years or whatever it is. We changed that to market representation just because we didn't want somebody to take that literally and say that, oh, the rep has to be in country, because that's not what we meant. And we've added some flexibility on the branded origin statement to allow anybody that wants to use a statement that differs from the example set out in the regs, you say, reach out to us. We need to approve it in advance, but reach out to us and we'll work with you on that. So that's like I said, it's a pretty quick rundown. Not a lot of changes, but hopefully some changes that increase the utility of the programs for you. So now I want to move into a different topic. You may have heard this. I just want to make sure that everybody has heard it. Effective next year, effective April 4th, actually, of next year, The SAM.gov, which currently requires a DUNS number, which you have to supply as part of your registration and along with any application for federal funding, they're going to move away. I mean, they're going to eliminate the DUNS requirement, and instead they're moving to a different unique identifier that they're calling the UEID, which stands for Unique Entity ID. Any application that you put in for federal funding up until April 4th of next year, you'll use the DUNS number. Anything that starting April 4th and beyond, anything that you put in, you're going to use this UEID number. And what do you need to do? Well, the answer is nothing. If you're in SAM, if you're active in SAM with a registration right now, which everybody in our programs should be, and I think is, you've already been assigned a UEID, so you don't even have to lift a finger. So I'm going to show you, this is the USDA's registration that I just pulled up and pulled a screenshot of. Right here, this is the DUNS number that we all know, and right below it has already been automatically added to everybody that is currently active in SAM. They've already assigned your UEID number to you guys. So again, beginning next year, you're going to use that. Just an information. I didn't want anybody to be surprised. I didn't want anybody to hear about this from somewhere else and not know what they were talking about. You've heard it here. Of course, this only applies to SAM, and it only applies to as it relates to SAM and your application for federal funding. The DUNS number and all its other uses, which may be many for you. I don't, tax, your licensing with the state, all kinds of stuff. You'll still use the DUNS for that. So I don't want anybody walking away thinking, oh, I can jettison my DUNS number, and then you find out that you have ceased to exist as an organization or something like that. No, keep the DUNS, but just as it relates to SAM and your applications for federal funding, you don't need to worry about it anymore. We're switching to this UEID number. All right. Moving on. So I said, this year it's just COPD, it's just us. In the future, we might invite compliance in. Certainly, I think it's probably likely that we will. But nonetheless, I wanted to take a little bit of time and walk through some compliance things, issues that we've identified, and I wanted to speak to those, even without compliance being on the program. And the first one is to talk a little bit about the MAP contracting procedures and how that whole process works. The purpose behind the compliance audits is to identify issues with the program so that we can all learn from our mistakes, whatever we're doing incorrectly, and improve our programs. That goes for me and my team, and it goes for you guys as well. And in the last year or so, maybe a little bit longer, we've seen a lot of issues with with contracting procedures under MAP, and they've been, the faults with that have been directed at me as much as they've been directed at participants for failing to do what's required in the regulations. So I just want to review with everybody. This is not new. I mean, nothing in this is new to the last big revision. I mean, this goes back to the 2013 revision in the regs. The language is all the same, and the requirements are the same. But everybody has to provide these contract procedures. You know that. What the issue is, though, is that there are these six elements that are specified in the regs that have to be a part of everybody's contracting procedures. And compliance is finding issues where, certain situations where some of these are not included. Particularly number 5, the conduct appropriate competition every 3 years, but there may be elements in the other ones. So I just want to remind everybody that each of these elements need to be included, whether you whether you feel like that's something that applies to you or not is immaterial. They're required by the regs, and they have to be in there. Just procedurally, once your contracting procedures are approved, you don't have to resubmit. They stay approved until you want to change them or you need to change them, and then you submit new procedures to us. This last cycle, we had 44, I think 44 different groups that submitted contracting procedures to us for review following their UES submission. And the vast majority of those were unchanged from the previous submission. So we reviewed them and we issued letters to you, but there's no need to do that. You only need to submit contracting procedures, revised contracting procedures to us when something changes. And you can make those changes at any time, all right? But when you change something, you do need to submit it to us. Please highlight the changes. It just helps us in our review so we can take a look at what's there, but you don't have to submit it just like every year. You don't have to submit it if nothing changes. If you do, so we reviewed those 44 that were submitted to us, but we didn't go through all of them to identify if there were missing elements. So if you identify that there's an element missing from your contracting procedure, please change that and submit it to us, where I would prefer if you could do that before January 1st, before the start of your next program year, so that we can take a look at that and get you updated procedures that are in line with what's required. Now, the fraud and branded procedures, those are required every year, whether or not anything changes. And they're due 30 days after the UES deadline. I think everybody's doing this. Specifically to the fraud procedures, I want to remind everybody to make sure that your staff is aware of any changes to the policy. I mean, this is a policy that is guiding your operations. I mean, it's not for us, it's for you. And so you want to make sure that staff is aware of any changes. There is a requirement that that you conduct training. You want to make sure that you're doing that. But fraud and branded, as applicable, are due every year, whether they change or not, and they're due 30 days. Contracting only required when you actually update. So the reason that we decided to put this on the agenda was really because there's been a lot of question about in particular, one of these elements, which is to conduct an appropriate form of competition every 3 years. So that's a requirement that it says, well, you have to talk about how you're going to conduct an appropriate form of competition every 3 years. And the issue that we're seeing is that a lot of participants in the program say, well, I only get my MAP and FMD funding. I mean, this is MAP. I only get my MAP funding. You only approve me to do things in 12-month increments. So I'm not approved to do any multi-year contracts. Everything I do is just 1 year at a time. So this doesn't apply to me. Everything I issue is a single year agreement. There's no reason for me to even have this in there because I just don't do it. Well, the first answer is whether you do it or not, whether you think you do it or not, it's a required element. Just put it in there. Even if you think, well, I don't ever do this, I'm never going to do it, just put it in. It's required. Compliance is looking for that. They're going to fault you for it being missing. They're going to fault me for approving it with it missing. So easiest answer is just to put it in. But beyond that, the language says, you have to conduct an appropriate form of competition every 3 years. It includes when it was written, and our interpretation of it is that includes single year agreements, 12-month agreements, whatever you want to call it, annual agreements, annual contracts that you issue to a vendor that you reissue or renew, probably reissue is a better word, year after year after year to the same vendor. We consider those to be multi-year contracts as well, even though they're distinct 12-month documents that end and then a new one is put in place. The fact that you're issuing an agreement, you're continuing that relationship with a vendor year over year over year, is a multi-year contract. And so we're asking you to conduct some form of competition in those instances every 3 years. You don't have to change vendors. You don't have to go with somebody else. You can be satisfied with the vendor and stick with it. But you want to conduct a form of competition so that you're sure that you're satisfied with the vendor. And this is also the reason that this was put in, was to give other vendors an opportunity to get in the door. Now, again, you don't have to change. You can stick with your guy if they're doing good work and you're happy. You don't have to change, but you want to give others an opportunity to at least present to you, here's my proposal for why I'll do a better job for you. Here's why I would be a better choice. You don't have to do it. You don't have to make a change, but you need to review it. So just want to be clear that this includes single year agreements that are reissued year after year after year. Okay. So in most instances, you know, the argument that we get is, well, this doesn't apply to me because I never do a multi-year contract. I think actually most groups probably do. All right. Next issue. We've gotten some questions, eligibility of price discounts. The regs say, you know, coupons, price discounts are not allowed. Well, what exactly is that? So we mocked up some fake ones here that you might see, you know, but really the key to determining whether it's eligible or not is the language. Is the language in this promotion, whatever it is, if it's a shelf talker or a, you know, an ad or whatever, is it presenting somehow that the price is special, is unique, is temporary, you know, special, 3 for $5, save 50 cents, obviously, you know, regular price now on sale. I mean, those are pretty clearly not eligible for reimbursement through the program. The point here is, over time, we want to build, we want to change hearts and minds, we want to change behavior based on factors that have lasting value, and a temporary price discount doesn't provide that. You know, if somebody just walks into the store and buys this particular product because it's on sale this week, and then next week they buy the one that's on sale that week, that's not a permanent change. So we don't want to promote, I mean, we don't want that to be the basis of your promotion. We want it to be something deeper, something longer, something lasting, the value of these products. So what is okay? It's okay to show a price. It's okay to present a price, but just present the price. Don't present it as, I mean, you know, in these instances, you know, here, you know, still only still $2.50 a pack, you know, great US quality, you know, 3 for $5. I mean, that's the price, of course, that's fine. So you don't have to be shy about showing a price. You just don't want to advertise that it's a special, it's a temporary price, it's a discount. All right. So just to help clarify that. And then the third thing that I want to talk about is program income. We've gotten a lot of questions about program income, and this has been an issue that compliance has flagged is something that we need to look at. So that's what we're doing. So the first thing I want to talk about is, what is program income? And I pulled this right out of the MAP regulations. So program income is gross income. So it's gross. It's not net after you pay for all of your expenses. It's not the amount of profit you make above and beyond a certain threshold. It's any income, gross income, that is earned by the non-federal entity, that's you guys, that is directly generated by a supported activity or earned as a result of the federal award. All right. So any activity is program income. This next language here, this need for approval. So this is actually language that we introduced with the 2019 revisions. This was not in the regs before. I did look back. I think I covered this in the webinar that we had a few years ago when we introduced these regulations. But I'm representing it here just to make sure that we cover it again. The regs say the intent to charge a fee must be part of the original proposal, along with an explanation for how such fees are used. So you have to tell us in advance that you intend to charge a fee, and explain, you know, how you intend to use it. The explanation would be very easy. Well, we're either going to use it to defray expenses, or we're going to return it to CCC because that's what you're required to do. But the original proposal, so that's open to interpretation, and here's my interpretation. The original proposal, I'm suggesting it does not mean your original UES submission. If you failed to put a discussion of your intent to charge a fee in your original UES submission, June 26th of 2 years ago, that means you're out of luck? No. It does not need to be a part of your original UES submission. An original proposal can be a proposal to add a new activity, which you are able to do throughout the life of the implementation of your program year. It can be a proposal to modify an activity if the situation warrants that. The point is, you need to give FAS advance notice of your intent so that FAS has an opportunity to ask questions or, review that if there are any questions. You just don't want to, after the fact, oh, by the way, I earned some program income. No, give us advance notice of that through whatever mechanism, adding a new activity or changing an existing one is appropriate for that situation. What do you do with program income? So any activity fees charged must be used to offset activity expenses or return to CCC. Return to CCC means you send us a check. And those fees can't be used as profit or counted as contribution to cost share. All right. When to use it. So this is a change from the policy that has been in place in the past for program income. As I understand it, going back many years, I think almost a decade, there was an understanding that a group had 3 years, the life of their agreement, to use program income. That has now changed with the publication of the previous regs. That has changed. So any income generated from an activity, the expenditures for which have been wholly or partially reimbursed with MAP funds, so that is the trigger, shall be used by the MAP participant in furtherance of their approved MAP activities in the program year during which the MAP funds are available for use by the participant. So it has to be used in the same program year. What does that actually mean? Well, it's the same guidelines that you have for submitting claims, which is you have until the end of your program year, either December 31st or June 30th, depending on your situation, plus 6 months, which is the same time that you have to submit your final claims to use up your program income. So you have 18 months to use that program income or return it. All right. And so I want to walk through a couple of examples just to talk about how to use it, or at least how I envision it should be used. So the first one is just a very straightforward example of every MAP activity, which is the activity generates $100,000 in eligible MAP expenses, and there's no income. I mean, this is what happens every day. You submit claims for $100,000 and CCC makes you whole, and that's it. And you walk away. All right. So that's easy. But now we introduce program income. So same activity, same expenses, activity generates $100,000 in eligible MAP expenses, but you earn $50,000 in program income or fees or whatever you want to call it. So what do you do with that $50,000? Well, you want to be made whole for this activity. There's still expenses that above and beyond the income that you have. So certainly you want to submit those for reimbursement. So you use that $50,000 in program income to offset the first $50,000, so to speak, in expenses of that activity that you earned. You submit claims for the balance, the remaining $50,000. CCC pays you $50,000, and that's it. You're whole, and you've used the program income. And in addition to that, in the past, the issue that we're seeing, or I'm not, based on the past practice, the issue that we're seeing now is that groups have this program income that they're kind of banking. They've got this big amount that they need to use that they're kind of carrying forward, and how do we use it up? So I'm submitting to you that you should never really be in the situation where you're banking program income, because given the choice between keeping a bucket of program income and a bucket of MAP funds, the highest and best use is to keep your money as MAP money, because that money lives for 3 years. It rolls over automatically as carryover. You don't even have to do anything. Program income, however, is bound by those requirements that we've already talked about. You only have a year to use it. If you don't use it, you have to send in a check, which is the last thing you want to do. The last thing you want to do is earn money and then have it go to waste. And in this case, you have displaced $50,000 in program in MAP money, which is available to you to do other things, or will come forward into a future year. So given the choice, you always want to use program income and get rid of it in deference of MAP funds. But what about the third example, which is same activity, $100,000 in MAP expenses, eligible MAP expenses, but now you earn $150,000 in program income. And I think a lot of times this is what people think about is, oh, there's $50,000 in program income. No. Remember, it's any money, so it's $150,000. In this instance, my recommendation is to stop and think for a second, does it even make sense to present this as a MAP activity at all? Because, I was just talking about what's the highest and best use of funds, program income or MAP, and it's MAP. Well, what's the highest and best use of funds for you between MAP money and cash in hand in the bank? It's cash. There's no strings attached. There's no regs for that. So in this instance, you've got $100,000 in eligible expenses, $150,000 in program income. Take the $100,000 to, make yourself whole on your expenses for the activity. Pocket the $50,000 cash, and don't even present this as a MAP activity. Just walk away clean. Count your blessings. Put the $50,000 in the bank. You've got $100,000 now in expenses that you didn't use, in MAP money that you didn't use, that you can use for other things, and call it a day. In order for this to work, though, the key is, remember back here in those definitions, it says any income from an activity, the expenditures for which have been wholly or partially reimbursed with MAP funds, becomes program income and is governed by the regs. You have to make sure that none of those $100,000 in expenses were reimbursed. And I know a lot of groups, a lot of times they generate program income from trade shows and things like that, where the gear up for that is a year in the making, and they're paying for booth space, or they're putting down deposits 6, 8, 10, 12 months in advance kind of thing. And a lot of people are eager. They want their money. They submit, can I submit this? Well, if it's eligible and if it's not refundable, I mean, sure, you can submit it, even though the event doesn't happen for 10 months. And they do. Well, the minute you submit a penny to MAP of those expenses for reimbursement, now this whole activity is a MAP activity. You can't go back. You can't undo that. So now this $150,000 is governed by the regs. You've got 18 months to use it. You offset $100,000 here. You offset another activity by $50,000. Not the end of the world, because you have offset $150,000 in MAP funds. But I'm just submitting. Think strategically about how if you anticipate earning income, and especially in this situation where you might be earning money above and beyond the amount of the expenses, think strategically about that and think for a second, do you even want any of this covered by MAP? Because maybe you don't. All right, I think that's the end of let me just make sure. Yep, that's the end of my slides. So I am going to transition the speaking role over to Chris Jaquette from COPD. I'm going to still maintain the slides, but I'm going to go on mute, and they're going to take over.
All right, thanks, Kurt. That was great. Well, thank you, everyone. It's great to be here. I wish we were all seeing each other in person, but soon enough that will take place. That will be the case. Most of you know me, but for those that don't, my name is Chris Jaquette. I'm the branch director for the Field Crops and Forest Products branch in Cooperative Programs Division, or COPD. So quickly, I'm going to start off our COPD section here. A quick overview of the program evaluations and how we use those as a tool in reviewing your UES applications and how we apply that. As Kurt mentioned, with the new regulations, that annual requirement that was it will be changed. It won't be required on an annual basis, but of course we still do place a high importance on these program evaluations. As you can see, the evaluations account for 10% of a UES review score. So the marketing specialists are reviewing these as part of the application as well. The participants meet this requirement through a third-party evaluation, internal staff evaluation, or country progress report. So there are different forms that we will accept for the evaluations. The main point here is to receive that full credit in the UES review. It's important that a participant has submitted at least one evaluation within the past 3 years. So we can go back, but with the annual requirement this past year for program year 21, most of you have already turned in them, and the rest turned in one, or the rest of you will turn one in for program year 21. So everyone, when we enter next year's review, will have one in this past year, because it was required annually for program year 21. But going forward, we will still ask that everyone submit at least one evaluation every 3 years, but we strongly encourage, particularly the larger groups, to submit annually or more regularly than just 3 years. But to earn full credit for the evaluation score, it does need to be one within the past 3 years, and it needs to consist of the 3 parts of a cover letter, an executive summary, and of course, the most important part is a quality evaluation. But those 3 components allow for the full credit. So you can have the best evaluation ever written, but you can't receive full credit without those other 2 components. And of course, the quality of the evaluation would change. The score would change with that. One other important aspect of the evaluation is what we asked with the executive summary. There are 7 key components that, Kurt, if you can advance the slide, I'll have the 7 key components. So these should look familiar to everyone. These are the 7 components that we asked are laid out and included in the executive summary. So it's very easy for the marketing specialists and ourselves to ascertain what is captured in the evaluation. Again, I'm not going to read through them. We have them here, and of course, anytime if you need this list of 7 criteria, we're more than happy to share with you. But I just wanted to, as the regulations have shifted, we still wanted to put the emphasis on how important we lay on the evaluations and how those are important to us as we evaluate the UES applications each year. With that, we'll move on to Nancy, and happy to answer any questions at the end of this.
Hey, thank you, Chris. I'm Nancy Hubble. I am the director of the Horticultural Crops Branch, and I'm glad to be here in the virtual world with you today. I'm here to clear up a little bit of the confusion over program evaluations and performance reports. Do you need to submit a program evaluation, or do you need to submit a performance report? The answer is you need to submit both. They are required by 2 CFR 200, and they are referenced in the program regulations, in the NOFOs, in your agreements. And this is how you're held accountable for a federal award. It's based on actual performance and results, so you are required to submit an annual performance report. Performance reports are required on an annual basis, no later than 120 days after the end of the program year. So when you submit your contribution report, remember to submit your performance report. And what should the performance report include? It must include a comparison of the baselines, the goals, and the actuals for each of your performance measures. If you fail to include all three elements, and we saw a lot of that this year, your marketing specialist reached out to you for corrective action because these three elements are required. Now, some people left out the goals, some people left out the baseline. So we need all three elements. And when you don't meet when your actual accomplishments deviate from your goals, your performance report has to include an explanation of what was not achieved. If you fail to provide this to us, your marketing specialist reached out to you for corrective action because we need all three of those elements, and then we need an explanation of why you didn't meet those goals. Now let's move on to the format for performance reports. Some agencies designate a specific performance report format. FAS has not designated a specific format, nor do we intend to. You're welcome to include this information in your UES or as a separate report, or for those of you who still submit country progress reports, you're welcome to submit it in a country progress report. The key here is that it has to include all three of those elements, the baseline, the goals, the actuals, plus an explanation of why the goals were not achieved. Another key to this to help your marketing specialist is that they need to know where to find this report. So if you included it in your UES, make sure you let them know where it is in your UES. If you included, if you send a separate report, that's fine, they'll know. But if it's in the UES, sometimes they had to look for it. It's really hard to find those elements, and they need all of those elements together in the same place in your UES because they spend a lot of time reviewing these and they do a thorough job. So we need all three of those elements and an explanation someplace in your UES so that they're grouped together. If you need help with anything about the performance report, please reach out to your specialist or to any of the branch directors in Cooperative Programs Division, and we will be glad to help you. If you have any questions, we will take those at the end. Now I'm passing this on to Zach Henderson. Zach?
Hello. Okay. Can you all hear me?
Yes, we can hear you.
Okay. All right. So, hi, I'm Zach Henderson. I am the director for the High Value Products branch. And I'm here, unlike Chris and Nancy, who were talking about programmatic related topics, I'm here to ask for your input. So traditionally, we've used some of our programs for things such as trade shows, market research, educational seminars, and consumer promotion activities. We're asking to think outside of our traditional program use box and trying to develop ways to make our programs more useful for you all. Realizing that the program regulations were drafted more than 30 years ago, these programs are older, and we are looking for ways to improve our program use. So we want to increase the flexibility for you all to use program support. We have a standing meeting with our program operations division to discuss different requests that come in regarding how we use the programs. We have a standing meeting every other Thursday to discuss those. Some of the examples of things that we've approved that have been a little bit outside of our norm. We approved a group to purchase iPads to collect survey data. At trade shows, we've approved shelf talkers. And in some cases, we help to fund equipment for virtual home offices. So we're really going to ask you all to go back, talk to your staff, and think about some ideas for ways that we can help to modernize the way that we use our programs, because they are your programs and we want to make them beneficial for you all. And we encourage you to take some time and have some discussions with your assigned marketing specialist. If you need to do the marketing specialists and the directors, that would be great. We would love to be a part of those conversations. But we just encourage you all to go back and sort of think outside of the box and think how we can improve the use of the programs for all of us. And with that, I will transfer over to Corey.
Next slide. All right. So similar with what Zach was saying about the bottom line is making some modernizations, and we need to hear from you. That theme is going to run for this slide and the next one for me. We are really hoping to receive input from you, and that can go to your marketing specialist, branch director, or myself. So one of the things that was important for us to let you guys know is that once we're done with the program process and getting everything set up for program year 2022, we will be looking at the coronavirus flexibility document, specifically to sunset what provisions it is appropriate to do so. The general rationale behind that is that COVID is proving to be more endemic than just a short-term pandemic. And we want to make sure that program funds are really being maximized for promotion and market development. Now, rest assured, we've already let some groups know this, but we can officially say that we will receive COVID carryover requests from the program year 2021 into 2022. But this provision will likely not be provided for 22 into 23. But by and large, we see a lot of aspects of life really trying to get back to some semblance of what existed before COVID, if not kind of settle into what is a new normal. The travel restrictions are being lifted all over the globe, and folks are finding that they're able to move around a bit more. But as always, and consistent with the public-private partnership, it's important to hear from you. So before we actually go about sunsetting provisions, if there are things about the COVID flexibilities that we hammered out the better part of 2 years ago that have been critical to your ability to administer a program that you see as still being a necessity, please let us know. Next slide. The other thing I wanted to talk about is an effort to kind of revamp success stories. So one of the luxuries, I guess, of this kind of maximized telework posture and everyone working from home is in the past couple of years, cooperative programs has been able to carve out some time in about the spring of the year and really look at our program process, the guidance provided to the marketing specialists, and really make some improvements. And some of this has been driven by simply the fact that our programs have been under a high degree of scrutiny in the past couple of years. There's been an Office of Inspector General audit of ATP. We're currently undergoing a audit of the market access program. And so whatever we've been able to take from our conversations with OIG and carry into our process and bring about improvements in such a way that it really doesn't impact you. It's really been really more of an internal success for everyone, really. But one of the areas that's always been kind of a sticking point is success stories. You know, the current requirement is that participants should submit a minimum of one success story for every 4 targeted markets, or 25%, or 1 story for every 2 million in approved funding. This has been the long-standing requirement, and it was an effort to kind of standardize the submissions that came in across groups, and it's been in place for quite some time. But we recognize that a one-size-fits-all requirement may not be the best approach. The other thing is that we receive a lot of success stories, and really the majority of the success stories we receive are very activity-driven in their narrative. So there, to explain that, there is almost a disproportionate amount of effort spent on really just describing what occurred over the course of the activity, rather than really illuminating the impact the activity had on export sales, your sector of industry, et cetera. So when it comes this spring and it comes to our time to kind of look over what things we can improve, we have flagged success stories as being an area of importance. You know, as Chris mentioned with the evaluation requirement, success stories do factor into the UES review process. The quality of those success stories is very important. And whereas the marketing specialists work quite hard with all of their groups to kind of go back and forth and strengthen the success stories that come in, we think that maybe we can do a better job at either developing a guidance document or something to that fact that helps you submit better success stories that really demonstrate the merit and strengths and outcomes of your program. So noting that this is going to be a priority for us to redefine in terms of the requirement and possible guidance documents, please let us know what would be helpful for you. And that's it from me.
Okay, all right. I'm Beth. Good afternoon or good morning, everyone. Wow, we have covered a lot of information today, and you might want to know how you're going to be able to remember all of them. Well, here's our service from Global Program to provide technical support and training available to all of you. Because of the pandemic, I was not able to go on site, visit, and work with you on a one-on-one basis. However, I have been working with our cooperator program division staff to conduct virtual trainings and discuss program administrative procedures. Once the travel restriction is lifted, I'll be able to schedule on-site visit so that we can discuss your questions or concerns that you might have and explore some best business practice model that could best fit your organization's needs. Okay, in terms of training modules, there's no one-size-fits-all training modules. For your newly hired staff, we provide overview of programs administrative procedures, then cover from over the financial management and internal control. We can also customize the training to address your specific need. For example, most of us have not been traveled for at least the last 20 months. So we can have a refresher on travel or tips on common areas of concern, such as some of the topics we discussed today, or to review your fraud prevention plan, contracting procedures. Furthermore, we can walk through and see how I can assist you to prepare electronic filing with proper backup documentations to support a reimbursement claim. Hopefully, this will help you to have a smoother compliance review. So how is it going to work So please let your marketing specialist and I know that you are interested to have a training session. We'll work with you to schedule this, whether it's going to be an on-site visit or virtual sessions. Our goal is to provide you support and ensure that you are familiar with the program's regulations requirement. So I look forward to having the opportunity to work with you. So at this point, I'd like to turn over to Kirk for Q&A. Thank you.
Thanks, Beth. Let me see if I can get out of this here. Okay, so that concludes the formal part of the presentation, and we're just at an hour of content, so that's good. Probably just about the point where everybody's starting to fall asleep. Now we're done, and we can turn it over to you guys. So I'm happy to, or all of us, I mean, the entire global programs team, we're happy to take questions, comments, conversation, feedback, whatever you want. You can do that through the chat feature. Participants now have the opportunity to come off of mute, so you can jump in, you can raise your hand, and I see some coming up already. So I'm going to ask for assistance from the rest of my colleagues, from the USAEDC tech people, to try and manage this exercise. It looks like they've been collecting questions out of the chat, so maybe, hold on, let me see.
Kurt, I can ask you the first question.
Okay.
Lainey has asked, what counts as the annual fraud training? Is there something specific that we should be doing? Do internal audits count towards this?
Beth, are you available? Do you have some thoughts you could offer on what might count as fraud training?
Your internal financial audit is basically only looking at certain financial aspect of it. However, the fraud training should cover the physical, how you secure your property, for example. So if you are interested to learn more about how to put a good fraud prevention plan, I would suggest that, contact me. You and I can talk a little bit more, and I can look at your fraud prevention plan that you have submitted to FAS, and we can explain to it. A couple of years ago, I think we did a training on fraud prevention plan. So it covered different aspects of the overall how you prevent from, people submitting, fraudulent documentations, how you safeguard, wire and transferring, writing checks. So it covered various, degree of information that you need to look into for your organizations.
And I think, and Beth, stay close here. I think it's, it's my general philosophy, most things that I have a hand in with FAS, that we tell you what needs to be done, but we don't prescribe how you do it. It says you need to develop a policy, a travel policy, a fraud policy, a contracting, whatever that works for you. It needs to be something that your organization can live with. But I don't think, and Beth, this is where I want to see a yes or no, that as far as the individual elements of what has to be in a training, we don't get into that level, do we? I don't, yeah, I mean, I think so, looking at outside, assistance, what kind of things is available. But I think the element that is important is that you do it, that you put forward a policy that says, this is how we're going to do it every year. We're going to do it. And then you actually, do the training. All right.
So Kurt, there's been a couple questions that have come in from people who are newer and wondering if there is a way to get the FAS 101 resources or a printed copy of the training overview and what they should do.
So for anybody that is this gets back to what Beth was talking about to close the session. So the fact that we're not doing FAS 101 in this environment doesn't mean that we're not providing that service. So if you have staff that are new, if you yourself are new, or if you just want your own personalized refresher, reach out to your marketing specialist, reach out to Beth, and that's what she's talking about. I can provide, a training, like an overview, like an FAS 101. We can do that for you one-on-one. We can customize it, whatever. But that training is available to anybody that needs or wants it. Just reach out to us, and we can work on setting it up for you.
Thank you. And this is more of a comment, but I'm not sure if any of the speakers want to, respond to it. There was a comment about the ability to purchase equipment would be a great way to support necessary research in the seed industry.
Yeah. So, I mean, I think that's the kind of input and feedback that we're looking for. And again, this whole, and I think this is probably came from Zach's solicitation for thoughts on how to modernize the programs, how to improve the programs. There's various levels of things that we can do. We can at the easiest level, we can just simply interpret things differently. We can change. Well, this is let's decide that this is how we're going to do this. Then the next higher level is something that's spelled out in the regulations, and there's a process. It's a cumbersome process, but we've done it here a couple of times. I opened by saying, we're waiting for new regs to be published, or updates to the regs to be published. So it's a process that we can do to make changes to the regulations that allow us to do different things to the program or with the programs. But the most restrictive level, the highest level, is what is allowed by law. The Farm Bill creates all of these programs that we're talking about, and it's updated every 5 years. And they are opening up that exercise now. We've already started to receive the requests for what do we need to be thinking about in the next Farm Bill? How do we need to make changes? And so that prompted this desire to reach out and say, if there are things at the statutory level that we need to change, now's the opportunity to do that, because then it's going to close and we'll have to wait another 5 years. So we don't want to miss that opportunity. But beyond that, the thought is just, like Zach says, what do we need to do with these programs to make them most effective for you, to make them work best for you? You guys have been working in a different environment for the last 2 years, however many months, and some of that probably started before the COVID lockdowns, but certainly that has accelerated a different way of implementing programs, a different way of implementing activities, a different way for you guys to do business. And to the extent that the new way that you're trying to do business is being constrained, or you're bumping into obstacles because of the way that the mindset that we have, the way that these programs are framed up, because they were envisioned in the 50s or the 80s or whenever, and come out of that mindset, we just want to know. I think I'm certainly understanding from a lot of groups that these virtual events that you were forced to do over the last year and a half have actually proven to be very valuable and very effective. And a lot of guys are saying, well, we're going to continue that even when we can travel. There's a place for that in our portfolio. Are there other innovations that you wished you could have done or would like to do that you weren't able to? We want to hear about that.
Sarah Gelpy, if you are still on the line, I wanted to invite you to unmute if you wanted to ask your question that you had private messaged, just since it's a bit long and I want to make sure I share the question correctly. But in the meantime, I'll go on to the next question, which is, will MAP roll over due to COVID from fiscal year 21 to 22? be open to mid-year programs where fiscal year 21 runs from July 2021 to June 2022, and fiscal year 22 runs from July 22 to June 23. And again, anyone is welcome if you'd like to unmute to ask your questions yourself, in addition to continuing to put them in the chat.
So
Yeah,
go ahead, Corey. Yep.
yeah. I was just going to say, it doesn't matter when your program year begins. 21 to 22 COVID rollover, we will take those requests.
Yep. And Sarah, I heard you come off.
Yes, hi. Thank you, Kurt, and thank you, Corey, for that. My question was pertaining to the contracting procedures and how FAS is viewing competition for market rep contracts. Previously, the MAP program notice that's published, I think in April 2016, allows some flexibility for cooperators to be able to conduct an annual evaluation of their market reps. And it wasn't fully clear to me whether your perspective on that has changed with the contracting guidelines needing to provide competition every 3 years. So I was hoping if you could provide some clarification on that point specifically, it would be very helpful.
Right. That's a good question. So the exception to the requirement to perform an appropriate form of competition every 3 years for what we're now calling market reps, not in country, but market, still applies. So those in country / market reps are exempt from that requirement to, to perform. You have to evaluate, you have to ensure that you're still happy with their performance, that they're still meeting it, but you don't have to perform that every 3 years. What we were saying is every other agreement, contract, relationship that you enter into with a vendor would be subject to the need to perform some kind of appropriate form of competition every 3 years, even if it's just a 12 months and then renewed for 12 months and then reissued for 12 months. But that exception for the market reps is still appropriate, is still in place, not
Understood.
changed.
Thank you.
Mm-hmm.
We do have a few more questions that have come in through the chat.
Okay.
The next one is related to CPR reporting. Can mid-year groups enter their results into the UESs now, or do they have to still have to do separate CPRs to meet the 6-month requirement?
Corey, Nancy, is that a question for you guys or a question for me?
I can take that one. Okay. Can you hear me?
Yep.
Okay. For CPRs for the July to June groups, or however you do your reporting, when we review the UESs and we look at performance reports for July to June groups, we're always a year behind. So when we did the UES, the 2022 UES review, we looked at your CPRs or performance reports for your most recently closed out year. And that year would have been 2019, I believe, or yeah, 2019. For the January to December groups, we looked at 2020. So it does, I don't know, I wouldn't get too concerned over it of when you turn it in, because we're always going to be a year behind on yours. We don't need, like, you're going to be mid-year. You were mid-year when we started reviewing the UESs, or yours had just barely begun. So you could submit, when we look at your UES, if you include your results in the UES, we're going to be looking at your 2000 results from your 2000, your last closed out year's UES. So if you have any confusion or concerns about that, please reach out to me or to your marketing specialist, and we can sit down and walk through what you have to do. But we don't expect you, if you're in the middle of a year or you have a year that just started, you can't possibly turn in the results for that year. You're always going to be, there's going to be a year lag in yours. I hope that answers the question and I wasn't too clunky, but please call me or email me and I'll walk you through it. Thank you.
Thank you. And the next question comes from Lindsay. Is the multi-year contract competitive bidding for contracts over $35,000 in annual spend? Or is there a different spend threshold for any and all multi-year contracts?
So the contracting, the MAP contracting procedures apply to any agreement that is $35,000 in value or more. And actually that may be, there were a couple of program notices that we were obligated to create, to put forward by the latest regulatory revision that we have been delinquent in putting forward. And that might be one of them. I think in the previous version of the regs, that language was in the regs, and in the newest version of the regs, it says, you know, these procedures will govern contracts at a threshold that FAS will establish in a program notice. Well, we just recently got around to doing that, so I apologize for that. But Mark has signed those. We're working with the FAS IT guys to get those up on the website. But the program notice, when it's published, will maintain that $35,000 threshold. So in annual spend, it's agreements of it's the value of the agreement. I don't believe that there's a, and Beth, correct me if I'm wrong on this, I don't think it's by year. You know, I think it's just the total value amount of the agreement is $35,000.
You're correct.
Okay, thank you.
So thank you, Kurt. This is Lindsay. So we already have the procedures and the processes in place for those $35,000 contracts. I guess my question was, is the requirements that you discussed today for any multi-year contracts? So say we had a $5,000 contract that, you know, we had every single year. Do we need to evaluate that every single year? I mean, every 3 years, or is it the same as the $35,000 threshold? Does that question make sense?
Yeah, so it would be, I mean, again, it would apply to any agreement that is in total worth $35,000 or more. So I guess if you had a $5,000, I mean, if $5,000 a year, an agreement where it said we're going to pay $5,000 a year for 8 years, then that total value of that agreement would be over the threshold. But a $5,000 a year agreement, that's a 1-year agreement that
Right.
it expired and then you reissued a new agreement the next year, and you just kind of kept doing that. I guess that would not trip across I guess that would not be covered by the contract and procedures, because it's only a $5,000 agreement.
Okay. Thank you for that.
This is Cheryl Houston. I'd like to ask a question on that. We may have a contract for $25,000 with the vendor, and then it may be for 6 months. And then as the year goes on, we need that contractor again to do similar work. And that one also is $25,000. So now we've exceeded the $35,000 threshold. So one of the things I understood is that FAS was looking at each contractor for an annual amount. And once it exceeded that, we needed to then go through the RFP process. Is that correct?
Well, again, it's per agreement. So in your case, you know, if you have one agreement, that's $25,000, and then you decided we need them to do another $25,000 worth of work, did you amend the first one? So now that agreement is worth 50, or did you issue a second agreement worth 25?
It could be either way. And
Yeah.
that's one of the things that I know during an audit, someone talked to me about that you can't intentionally just make contracts under the threshold so that you don't have to go through the RFP process. We don't do that, but I just wanted to make sure as I'm communicating these things within our organization that I'm communicating it properly.
Yeah, I mean, certainly I agree with that. You know, we don't want to look for loopholes to avoid doing something. But I mean, that's an interesting one. If it was $25,000 and let's say you didn't, it wasn't covered by the procedure, so we didn't abide by them. But now we want to amend it, and all of a sudden it does become covered. You know, I think you probably at that point you should walk back through and make sure that what you're doing, the $50,000, the amended agreement for now total of 50, meets all of the requirements. You know, that there's no conflict of interest, that there's I don't know, all of that stuff, including perhaps you need to, even though the second part that's only worth 25,000, maybe you need to open that up to a competitive process, because now the total amount of work is covered. So, I mean, I would suggest, you know, better safe than sorry on that.
That's how we do it here, but sometimes I want to make sure I'm not going through and asking for more than what we need. So I'm usually pretty strict on what I understand from the regulations. Another thing that came across when you were talking about the RFP process is if we went through the RFP process and we selected a vendor and they have the job for the year, but as the year is going on, we're not completely satisfied with their work. And we know we got other good proposals in when we sent the RFP out. And would we have to re-RFP that in order to use one of those other contractors? Or would we be able to select one of those and have that within the 3-year period?
So I think that's probably something that I mean, my response to that is that's something that would be governed by your own procedures. So the reason that we say you need to have procedures in place and they have to at least address these 6 elements and explain how you're going to do things is to cover situations like that. And now you don't have to only meet those 6 elements. You know, you can talk about, I should pull the thing up, I should look at it. Do we require you to talk about, you know, non-performance, termination? I don't recall, maybe Beth or Rob, if you guys know offhand, I don't recall. But anyway, that doesn't mean that it shouldn't be in there. I mean, it's a best practice. It's wise to have a clause in there. It says, if you fail to perform, this is how we're going to handle it. And then you simply follow your own procedures. So, you know, you don't, like those kind of things. And this gets back to what I was talking about at the opening, where, you know, we kind of say, look, you need to develop something that works for you. FAS doesn't, you know, we don't want to, at least my preference is, I don't want to be involved in every step. I don't want to micromanage every step. Certainly, I don't want to set us up where we have to approve every step, where we're a participant in it, because you need to run an operation that works for you. And so if your procedures don't talk about, you know, termination and non performance, then maybe it's an opportunity to amend them, put something in there that works for you, and then follow that.
Okay, thank you. And then the last thing on this, you know, we do have those contracting procedures written, and they are the ATP and MAP. We basically follow those for FMD too, but it's not a requirement. But what I understand is during the audit, the compliance review specialist will be looking at that, you know, to see what even if they're reviewing FMD, they will refer to our contracting procedures for ATP or MAP. Is that correct?
Well, I mean, they may, I don't know whether that's correct or not. I don't know what the compliance specialists are looking at. I would say if you had an FMD or an EMP, you know, I mean, there's some language in each of those regulations about you know, some kind of process. So you're not, it's not like everything is silent. But if there was an FMD agreement and they said, well, you don't have this, you didn't follow this MAP process or ATP process, that would not be appropriate. I mean, they may have a case if you I don't know, if you issued something inappropriate. Certainly that it's not a get out of jail free card, but no, they should not be applying the MAP or ATP yardstick to other programs.
And they're so similar, the FMD and MAP. Why doesn't, I like having things written down because I can always refer to them when people ask me, can I see that in writing? Why doesn't FMD have something similar to that?
I don't know. I don't know the answer to that. I mean, I don't even know, honestly, why that was inserted into MAP back in 2012, 2013. I just don't know the history of it. But I mean, it is not, is the answer. But that doesn't mean, again, that you can't or shouldn't on your own as an organization say, you know, these procedures, these contracting procedures that meet the MAP regs, that meet the ATP requirements, we're going to apply them across all of our stuff because we like it. It works for us. I mean, that's what they're for. And you 100% have the right to do that. Just because it's not mandated by FMD doesn't mean you can't apply it.
Okay, and that's what we do for the most part in our own policies and procedures. So that's good to know. And then when we're talking about the in-country rep versus the market rep, it's just that when the UES, if they're called markets. So is that the reason for the change in the terminology, or is there a difference in the definition between in-country and in-market representative?
No, it's not at all from the UES. The only reason was we were just concerned. We've had a lot of situations lately where people are taking very literal interpretations of a lot of stuff. And we just thought there might be a possibility that somebody could get a bee in their bonnet and say, you know, wait a minute, this in-country rep is not actually in the country. And we just didn't want that to happen. So we just thought it would be more expeditious to just say a market rep, which covers, well, they could be in the States, they could be next door in the other country, in the region, whatever. It was just to head off the possibility of a problem.
Thank you, Kurt.
Lori, I see your hand up.
Hi, Kurt. How are you?
Good. How are you?
Good, thanks. So I just want to be clear on this $35K annually, because sometimes we have a contract that's $20,000 in a year, so we don't bid it. But you're saying if it accumulates to over $35,000 within a couple of years, we do have to bid that?
Well, so I'm trying to pull up, unless Beth or somebody, does somebody have the regulation? Let's take a look at the language. I just want to make sure.
I think it's on an annual basis.
I think it.
That's what I thought as well. So it's only if it's annually and it turns into more than 35, then it would have to be. But if it stays at 20, then it would be all right for that year.
Hold on, bear with me. I'm trying to bring them up.
Got a little confused and a little frightened.
Okay, subawarding procedures. Shall govern all of the MAP participants funded contracting involving contracts with an annual minimum value that CCC. Okay, so you're right. It's an annual minimum value, not the total value of the contract. Annual minimum value that CCC shall determine and announce via a program notice. Okay,
Okay,
good.
thanks for clearing that up. I appreciate it.
Yep, thanks for the question.
And Kurt, I did have one more question that we haven't gotten to yet.
All right.
It's really a discussion point. So Jeff asks that he is interested in ideas for success stories for trade barrier mitigation. It's difficult to tie it back to the dollar, I'm not sure if he meant to say dollar value of export volume. Often these projects are multi-year. So can you offer any ideas or stories?
Yeah, I mean, I think that's a question for the community at large, you know, anybody that has found success in how to do that. I mean, that might be a good topic of conversation for the for the broader community to get together. But if anybody has any ideas, I guess they can share them with Jeff.
That was the last question that I had messaged to me. If I've missed anybody's question, you are welcome to unmute or submit again.
I had one more
Right.
question. This is Lori again.
Yep.
Are the new regs available for our review? Where can we get a copy?
So when they're published in the Federal Register, and in fact, it's just the edits, the changes that will be published in the Federal Register. That's when they will, I mean, that's when they're available to the public. And so I think that is, like I said, that's, we're hoping any day now
Okay.
that will happen. When they are published, I will send to Lorena to distribute out to you guys, to everybody, a list of the changes. Just so that you have the citation and you know what's changed. But once they're published in the Federal Register, then they will be promulgated through the Code of Federal Regulations online, and and then they'll make those changes, and then that's it.
Okay, thanks so much. I miss seeing everyone in person. It's so sad.
Yeah.
Next year.
Yeah. I was excited when I thought we were going to be in Baltimore. I was looking forward to it.
I know. Well, that's next year.
Yep.
Do you want to let everybody know about the program income infographic?
Oh, yeah. Thank you.
You're
So
welcome.
we provided two materials through USAEDC through the, I guess, where they're available on the mobile app or the meeting materials for everybody. One is a copy of the presentation, and the second one is like an infographic that walks you through the the program income. What do you do under the scenarios? Now I think it assumes that everything you're doing is governed by the regulations. Of course, if that scenario 3 or example 3 that I proposed, where you just walk away from MAP entirely and nothing is covered, that wouldn't be in there. But I think that's an option as well. But anyway, yes, thanks, Beth. Those two materials are available to everybody. Okay, great. I mean, any last questions from anybody or comments from Corey, Zach, Chris, Nancy, Beth, Rob?
I have one last question. When do you anticipate us hearing about our 2022 allocations?
Corey, you want me to talk about that, or do you want to take that?
Yeah, sure. Cheryl, all the work's been done. We're ready to go. We're just waiting on final approval of it. So we're hoping that the marketing specialist will be making the phone calls this week. But since we've done all our part and we're just waiting on the higher level clearance, I can't give you a specific date.
Thank you.
All right. Well, if there's no other questions or comments or conversation, then on behalf of the rest of my team, I'd like to thank everybody for joining us and participating. We hope you found the session valuable, and would appreciate your feedback, your thoughts, your comments, and if we continue this next year, then would love your input as we get ready for the session on what kinds of topics you want, what we need to cover, what you'd want us to talk about. So until then, I hope everybody enjoys the rest of the conference. And we're always available, happy to talk at any time. If anybody has a question, don't hesitate to reach out. We can set up individual training, take care of whatever you need, and answer your questions. So thanks to everybody, and we'll hopefully see everybody in person soon.
Thank you.